Hello and welcome to the Secretariat. The economic survey was presented today by Finance Minister Nirmala Sitharaman. Of course, the main highlight of the survey is the GDP growth rate. 6.3% to 6.8% is what the GDP growth rate is expected to be in 2025-26. For this current financial year, that is 24-25, the GDP growth rate is estimated to be 6.4%. To delve deeper into the economic survey, I have with me my editor Jointo Roy Chaudhary. I have Abhijit Mukherjee, our consulting economist, and I am Mahua Venkatesh. Together we will delve into the survey, bring you an analysis and help you understand the survey a little better. Jointo, if I may start with you. The GDP growth rate is expected to be 6.3% to 6.8%. This is rather disappointing.
Yes, indeed.
What is your take on that?
Well, several things have happened since 2023-24. One, of course, is that global headwinds have emerged. There has been a war in Ukraine, Russia, between Ukraine and Russia. Middle East has erupted, which meant oil prices went crazy at one point of time. And now, of course, the Trump administration has come into power and they are threatening to slap tariff on everybody. That has its own toll. The rupee today depreciated. It's reached its lowest nadir till now, something like 86.65 to the dollar, which is pretty low. And we have been the worst performing currency amongst major Asian currencies compared to the Chinese yuan, the Korean won, the Thai baht and the Malaysian ringgit. But that apart, there are two other things which have happened. One, consumption demand in India has slowed down. So that's a bad news for Indian manufacturers. They can't sell what they wanted to sell. They have a lot of inventories. Car makers are leading in that area. They haven't been able to sell too many cars. The other problem is that inflation has been raging pretty high.
Yes.
Now, that was mainly on the back of food inflation and energy prices going northwards. But right now, the economic survey seems to indicate that inflation might taper down. But there is a risk. It also talks about that risk, and that's that the commodity prices starts hardening up. If you want more EVs, if you want more green energy, then obviously certain critical minerals will become costlier. Secondly, and those critical minerals are also being used in other industries.
Absolutely.
Then the energy prices. If the Middle East war escalates once more, there's talk of peace in the Gaza Strip. There has been exchange of prisoners, but you never know what happens. USA might start another war against Iran, for instance. If that happens, then energy prices will go crazy. So all those ponderables, those question marks remain in our entire story. But if we want to overcome this slowdown, what do we have to do? We have to go in for reforms.
Now, Jointo, if I may interrupt you here, we've been hearing about bringing in reforms for a very long time. We haven't seen the kind of reforms that India would have wanted to and to support the kind of growth we are expecting to. What do you suggest? What is the policy prescription? What is needed?
Okay, but before I answer that question, I'm going to talk about something else. We all expect Nirmala Sitharaman to cut some taxes, juggle the tax rates for the middle class especially, so that some money is in their pockets, which they can either spend or they can save. If they spend it, it's good news for industry. There will be that much more buying power in the market. If they save it, it's good news again for the industry because those savings will go into what we call investable resources, which is what you need. Now, reforms. No, before we talk about reforms, you have to understand India's productivity rate. India has one of the lowest productivity rate per hour, per worker in the world. It's $8. Compared to us, China is $15. Brazil, which is our rival in the BRICS countries, has $17. Let's not talk about USA, which has $70, Germany $68, Japan $42. These are, they are high growth countries. But nevertheless, what do you do in order to increase your productivity? 2-3 things. One, you invest so that your laborers are more productive. Mm-hmm. 2, you bring in new technology, maybe AI, maybe something else, robotization, which again increases productivity. Third, you skill your workers and you make them much more healthier than they are, which means you have to increase your spending on education and on healthcare. We will like to see the budget which comes tomorrow do something on those scores.
Abhijit, you've been writing on employment. Employment is one area which needs a push. Unemployment rate has been rising. What is your take on the employment situation?
Employment situation, the latest economic survey in any case very correctly pointed out that employment generation and quality jobs generation is the way forward to make the workforce gainfully employed in the long run as well as in the short run also. So obviously, there are certain low-hanging fruits and certain long-run kind of measures which possibly the budget can get into. But then from the industry bodies itself, there have been certain couple of proposals which are actually pretty good. One proposal, such proposal is that to make an integrated national employment policy under which all employment related schemes of the central government and the state governments can be brought together, and which will actually cut down a lot of procedural lapses, time, and even probably in terms of money also. Secondly, the industry is also saying that if there is an extension of the existing internship program which had been proposed in the last year's budget, if it can be extended up till 3 years, not for the 1 year, but up till 3 years for every new entrant into the workforce, and with a cap of rupees 1 lakh per employee per month. And then thirdly, then there are definitely, we were talking about production linked incentive and PLI, and then definitely there can be a possibility of extending it towards the labor intensive sectors like textile, even tourism, these kind of sectors. If there is a possibility, the budget can even look into that. That is one way of looking at generating more employment. And then productivity, he was talking about the entire increase in productivity. There comes a very important point, because the women's participation in our labor force is not in a very good situation. Statistically, it is at a very low level. And if we have to increase generally the productivity of our economy, then we cannot just ignore half of the population. It is almost impossible. So obviously there are also some low hanging fruits like
absolutely
creating creches, then making
the problem is
housing.
The talks have happened on creches and all, but the implementation bit is probably in question. Now Joyanta, he spoke about PLI, the production linked incentive scheme. Do you think it needs to be expanded beyond the 14 sectors that we have today to generate more jobs, to generate more meaningful jobs, and to draw more investment?
Mo, actually, I'll turn to you because exports is your area, your forte. But before that, quickly, PLI basically was supposed to be for industries where we wanted to bring away some factories from China to India.
Right.
To do that, what we were going to do is give the difference between what it would cost to produce in China, let's say in Shanghai or in Hong Kong, and what it would cost to produce the same good, let's say a solar lamp or whatever it is, in Mumbai or Ahmedabad. So that difference was supposed to be the PLI.
Absolutely.
Now you can't keep on extending it to every sector in the world. That reduces its impact. It doesn't really work. Those investments would anyway come, whether you give PLI or not. But yes, there can be areas where we want to bring away factories from China or elsewhere to Indian shores.
Right.
We haven't been too successful in that. We have tried it, but Mexico, Vietnam, Cambodia have been beating us all in that area. But the whole problem is PLI is also supposed to encourage exports.
Absolutely.
And our exports are facing huge headwinds. They are stagnating.
Absolutely.
What steps, Mahua, do you think the government should take or will take in the budget to encourage exports?
See, one of the things, of course, like you mentioned, exports, which is a labor intensive, like what you spoke about employment.
Textiles.
A textile sector. Now, the economic survey has actually said that, in the textile sector, exports have is a bit of a concern, and India is probably losing out to countries like China and Vietnam, which adapt much faster, they're nimble, and they change fast. to the changing needs.
The rules are changing
absolutely.
fast.
India takes a long time to change. It leads to higher costs, and in the process, India stands to lose. When we saw this kind of a situation in Bangladesh, there was this expectation, there was a lot of hope that a lot of these export orders would turn to India. It hasn't happened the way it was expected. Of course, some orders have come in, but the expectation was much higher. Also, it's important to diversify markets, find newer markets, and go fast into those markets.
Yeah, for instance, China has got
Yeah.
into Africa in a big way.
Absolutely.
We are still following.
Absolutely.
So,
And
are we doing something to get into more focused market areas with more products?
the thing is, there are these products which are already which are being talked about.
Automobiles,
Yes.
EVs.
For example, if you see PLI, we have a PLI in, for example, mobiles. But the thing is, we are still assembling. It's not being manufactured. The important thing is to boost manufacturing. We have to move from assembling to manufacturing.
The value addition has to be there.
Absolutely, absolutely. And that's how you need to be nimble, you need to be fast, and you need to boost your exports. And especially with Trump coming in, there is this uncertainty on tariffs, on, like you said, geopolitical risks, geoeconomic risks have gone up tremendously.
Absolutely. I don't think the world is ready for another China to grow. So we can't really expect to displace China or to become another China. The world will not agree to that. They will impose tariffs on us. But we will have to be nimble-footed, as you said, and work around those tariffs and go somewhere with our exports.
And before we close this discussion, would you like to throw a little more light on the geopolitical tension, because that is one of the main threats, and even in the press conference the CEA mentioned that the focus should be on boosting domestic growth.
But there is a limit to boosting domestic growth. We all know that. But yes, we will have to boost domestic growth. But if we remain focused only on domestic growth, obviously we'll be losing out on a major opportunity. The world market is much, much bigger.
Right.
We have about 2%, nearly 2% of the world global merchandise export market, and about 4% of the services sector
Absolutely.
export market. But we have to grow faster. We are aiming to have about a 15% market share in the next 2 to 3 decades. If we want to do that, we have to obviously increase our exports efforts. And to do that, economic diplomacy will have to play a major role. But then let's look forward to what the budget is going to tell us tomorrow, what new functions we do. In fact, even in the budget we have, there is this budgeting for Indian economic aid. Much of it goes, of course, to neighboring countries,
yes, absolutely.
Bangladesh, Myanmar, Afghanistan, but also a lot of it goes to Africa, which is going to be the key market where Europe, America, China and India are going to battle it out.
Absolutely. And with that, we come to the close of this discussion. Let's hope tomorrow's budget has lots of goodies for us. And there are expectations of tax cuts, there are expectations of boosting investment and coming up with newer sectors for the PLI scheme. With that, we come to this close. Thank you for watching.